Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. This is a GW Investment Institute podcast in the School of Business, the George Washington University School of Business, that is. And we're here in Duquesne Hall in the heart of Foggy Bottom, Duquesne Family Studio. Welcome back. We took a week off. We had the weather here. There's still plenty of snow outside if you're in D.C. This is February 3rd, 2026, and it's been colder than normal temperatures. And so the snow has stuck around, and so everyone's still digging their way out of here. But we're back in the studio. Thanks to everybody, to Jeff and Josh for making it all happen for us, and of course, Susan. So what are we going to do today? Remember, educational purposes only and entertainment as well, not investment advice. Disclaimer also at the end. But we're going to do a general market overview today. So to catch us back up, so we missed a week. So let's kind of pull everything back together here. Remember, GW Investment Institute podcast. And so we're going to talk about the markets, an overview of what's been happening. And so there's a lot that's been going on. The markets continue to do fairly well. So we'll talk about sort of the year-to-date numbers, and we'll get into a couple of names. But there's obviously some big news out that happened while we were, stuck in the snow here. Kevin Warsh was nominated as the Federal Reserve Chair. So that's big news. He was one of the, front runners for this, and so not completely unexpected. This person, Mr. Warsh, is eminently qualified this job. He's been confirmed before, so he is nominated now. He's got to go through the confirmation process. He has been a federal governor, so not the chair, but a governor before, and so he's been confirmed before. This is obviously for the chair role, and so we'll see how that plays out. But President Trump nominated Kevin Warsh for that role. Sticking with the Fed, what did they do in their last meeting? They held rates steady. Now, there's this push and pull that's happening with rates right now, and obviously Trump, along with any other president for the most part, wants lower rates. And that's typical. They want more borrowing. They certainly want more activity. And a lot of that is connected to what's happening in the market around affordability. And so you can see that that's lining up to be a big piece of this year's election. So believe it or not, 2026 already, it's going to be the midterm election. So affordability is going to play into that. So when you talk about lower rates, then you're certainly talking about people buying homes. And this is a big part of what I think this administration, and certainly really any other administration, that's trying to tap into what people are thinking about on the market side, but also on the politics side, for this year. So we'll see how that plays out. We'll see what Kevin Warsh does. This is a hot take. I think he'll get nominated, or not nominated. He got nominated already. I think he'll get confirmed. And so we'll see what happens. There'll be a push and pull on that. Is this person qualified? I think very much so. Can there be, consternation amongst people who are making these votes? Of course there can, and there needs to be some bipartisan possibly to make all this happen. But we'll see. We'll see how the nomination process flows from here, or rather the confirmation process flows from the nomination process. And so we'll be paying attention, and we'll report back to you, obviously, if there's anything for that. And again, back to the Fed. Overall, holding rates steady, so nothing to see there, no big change. So let's now check in on the broad indexes. And so the year has been a little bit up and down, to say the least. And so if you check in first here, let's do the S&P and the Nasdaq are the two that we regularly check in. And most of our holdings are in these two indexes for the most part. Obviously, we have some names sometimes that fall outside of those two indexes, but for the most part, they're comprised, the names that we hold, a fewer number of names that are both in those indexes. And so if you look at the S&P 500, the year-to-date number is 1.5%. And so again, this is February 3rd, 2026 when we're recording this, and today the market's at 69.48, up 1.5% year to date. So not a huge number, but things are relatively good, for the stock market, and you have to think also that the valuation matters here. People are concerned about that on the S&P 500. But, we'll have to see how that plays out for the rest of the year. And we'll talk a little bit about the valuation overall. But let's go change to the Nasdaq now. So if you're looking at the Nasdaq, the year-to-date number, right now it's 23,357 is the level, and that's up 0.5%. And there's been some back and forth in some of these companies, and we'll talk a little bit about some of the companies in both of these indexes in some of the companies, obviously, that we hold. The Investment Institute, obviously we're chugging along. I wanted to say a big thanks to our students who, at the end of last semester, got all of our stock pitches in, and we made the trades, the things that got approved. And so great fun. And now we're back up and running. For the spring semester, we're running Finance 4101, which is applied financial security analysis. So, that's the single security fundamental analysis class. We're also running the quant class and the VC class. And so this will be a lot of fun this semester. We'll see what comes out of these classes and what ideas come out of this. The students in the venture class will be pitching in the new venture competition, at least in the first round. Hopefully they make it further than that. In the quant class, they're going to be building models. So I think that's going to be a lot of fun. It's always interesting to see what type of models students come up with. They build these in teams, and I think it's a really interesting way to learn about the quant world. The same as our other classes, learning by doing. And that fund has actually done fairly well. Also, it's one of our smaller funds amongst the just over $11 million of capital that's part of the overall endowment that our students manage. But I would have to say it's a super fun class. Shout out to the students who have taken that class, and I think it's very instructive. Again, you're learning by doing, and if you're trying to get into the investment business, I think it's a great setup for you. Even if you're not going to go specifically into quant, the market is changing rapidly, and that's a bigger part of it. So for this semester, we'll have to see how the ideas come out. Excuse me, a sip of water from my George Washington University mug. We'll have to see how that all comes out and see what ideas come out of this semester. All right, so let's look at some news overall. We talked about the Fed. Obviously, they're trying to balance this out. People are still concerned about inflation, but you're also concerned about growth. You're concerned about the unemployment situation, but it looks to be, fairly stable, holding rates steady right now. Nothing to see here, as I mentioned. So what is happening? You're certainly looking for the market, or many people are looking for the market to broaden out. You had the Mag 7 really pushing the last couple of years here, the specific earnings and the growth of that in this sort of AI super cycle. For names like Google and Nvidia and Microsoft and some of the names, obviously, that we own and have talked about before. Some other things that, I think is fairly interesting is on the gold and silver side that has a huge run up and it's pulled back, and Bitcoin has pulled back, and you're seeing some of these assets where people, maybe thought that these were hedges for inflation, and they're pulling back, lately, and hard to know why. Looks like more of a technical move. Hard to say that the fundamentals have shifted that quickly, but gold was hitting all-time highs and then has now recently pulled back on that. So what else is happening in the market? So let's look at a couple of names. We're not going to do a deep dive on any of these names. But when you look at Apple, it recently announced its earnings. Apple has done fairly well. Services are doing well. iPhone 17 has been a big hit, and I think a bigger hit than people expected. I think the news here around their partnership with Google and Gemini, and that's going to be the sort of the brain for their AI moving forward. They didn't disclose the details of that. If you listen to the call, they didn't give the specifics, and they do not plan to. So we'll have to see what happened there. But Google and Apple are teaming up here. So it'll be interesting to keep following that. They're already teamed up on the search side. So that's the default is the Google search for Apple, and so we'll have to see how that plays out. So if you look at how's Apple done year to date as a consequence, not stellar, down 0.73%. And if you look at the 1 year number there, year over year, you're up 18%. So fairly good there. Obviously, there was a lot of pressure. And just a couple of stats. What does that put Apple on the market cap side now? That's just under $4 trillion, 3.96 trillion, and the PE ratio of 34 times. And so, people are concerned about that PE ratio and thinking that, the valuation is not justified, especially given that Apple doesn't have this AI play in place and they're building this partnership with Google. And on the other side, people say, well, they didn't spend all this money on AI. And, consequently, they're in a better position now to decide how to move forward from here. More on Apple on another episode, but that's where Apple is. Let's talk about another fan favorite here is Amazon. Again, these are just check-ins, not deep dives. But what's the year to date on Amazon in the 1 year? So the year to date on Amazon, it's actually done fairly well. Obviously, it's not a long time. We're at the beginning of February here, but it's up 3.27% already this year. And I do think if you're watching and paying attention, and I've mentioned this before, that Amazon is in a very good position to help monetize a lot of its assets against AI. If you think about companies that are positioned very well to figure out productivity gains with AI, Amazon is positioned well across retail and the robotics that they can deploy in the warehouses, and obviously with AWS also. So I do think it's should be watching it, paying attention if you're thinking about AI. Um, where does that put it? Market cap 2.55 trillion right now, with a PE of 33 times. Certainly not a cheap stock, not super expensive. Cheaper than Walmart, by the way, which we won't talk too much about. But Walmart is hitting trillion-dollar market cap status here as well. So if you look at, a couple of other companies that I want to talk about here, just touch on. Let's go to Google. Alphabet is the name. Everybody generally knows it as Google, but what's the year to date here on Google? So the year to date up 9.9% already. So it's having a big year, and I think on the back of really Gemini 3 coming out towards the end of last year. And if you look at what's the 1 year number for that, they're up 71%. So that's pretty exceptional when you consider, if you look at the market cap for this company, $4.15 trillion market cap company, to be up that much is very significant. And we'll talk more about Google in some other episodes, and we'll probably talk about it a lot. But one of the things that is driving this is this Gemini 3, I think, and if you're using any of the models, and I use Gemini, Grok, ChatGPT, and Claude on a regular basis. I don't use DeepSeek that much, but I do have it. If you're using these models, you can see that sometimes they leapfrog one another. But if you look at the difference between Gemini 2.5 and 3, there is very significant increase, especially for the work that I do around investment analysis and trying to get analysis done with the models. Gemini 2.5, at least the version that I was running, wouldn't really run the investment analysis for me. Certainly not in a way that I wanted it to. But 3.0 is doing that and doing it well. I think as far as multimodal goes, I think it's excellent. You certainly could do the images and everything, and it's built in. If you have enterprise, Google Workplace, it's very good of integrating all those things. And so, they're getting, I think, the bump from that, people realizing that, they're going to be formidable now. And I think ChatGPT obviously has the early lead as far as, first out of the gate with that type of setup, with the user interface, and it really working well. Now, a couple of the other things that's helpful for that is that, sort of the inertia for people saying, well, I'm using ChatGPT, so we'll see what happens there. And of course, Claude is Anthropic, private company. OpenAI is private company as well. But Google, I think, is well positioned here, and I think will continue to do well. So let's talk about another few companies. Microsoft. So Microsoft has been having a very challenging time here. And so if you look at what's the year-to-date number right now, it is off. Microsoft's a big company. It is off 14.5%. It's trading around 413 today. But if you look at what's the market cap, it's a $3 trillion market cap, and it's off that much. That's fairly significant. Now, it recently announced earnings, and people were expecting, obviously, more from them. I think part of the concern here is obviously the growth in the cloud business, and that's slowing. The acceleration of that has slowed, and that's the Azure. And the other part is, I think people, at least, again, not investment advice, insert opinion here, is that the market is seeming to think that Microsoft, while they had this partnership, or still have this partnership with OpenAI, and possibly had a good lead, let's say, in the AI game with Copilot and the things that were built on top of that, have possibly now fallen behind and don't really have a clear path forward that's their own. So they're certainly tied into OpenAI, and figuring out how that's all going to play out moving forward. I do think that puts them in a more difficult situation. And if you listen to the models that people are using, for the most part, just like the ones that I mentioned before, I did not list Copilot. I think Copilot definitely falls way behind as far as the functionality, ease of use, and all these other metrics that I would use personally. And if you survey people in general, I think Copilot doesn't really make the list unless that's the only model you have possibly access to. Then that's something different, and that becomes that's part of the enterprise. But if you think about what models people prefer to use, given that they have access, you'll regularly hear, ChatGPT, Gemini, Claude, Grok, Copilot, not in the mix. So we'll have to see how this plays out. But I think that's, at least in my view, some of the concern here for Microsoft and their AI strategy, seemingly having a really good progress before, but kind of falling back a little bit. All right. probably every episode we need to talk about Nvidia. And so what's Nvidia been doing and how has it, been holding up? So the challenge for Nvidia is, people will think, okay, well, they have been well positioned, but maybe they're just not as well positioned as people had thought. One of the things that has come out is obviously that people think, well, maybe there's just too much hype in this trade, and maybe there's much to do. Maybe not about nothing, but just that there's too much in this. And so if you look at the year-to-date number, not down substantially, but for a big company, it is 3.84%. You're at 179 today on the share price. And where does that put the company? Still super large company, $4.39 trillion market cap, and a PE of 44 times. And so, and the forward's even lower. So if you're looking at that, you're not saying that, okay, this is a really expensive company by any measure with the type of growth you can expect and what's happening in AI. And you would think that, okay, well, maybe this will blow over. But I think you certainly have to watch this. And if you think about the stories that are happening here, and we'll cover this in another episode, are people really chipping away at their lead? We'll have to see how that all goes. So I do think it's an interesting time to be watching. I think another company that's worth mentioning here and a company that we own is Berkshire Hathaway. So if you're thinking about Berkshire Hathaway, Warren Buffett stepped down at the end of the year, and Greg Abel has taken over that company. So what have they done year to date here? So not a big move here. Year to date, you're talking less than a percent up, 0.76% up. Okay, what are the stats on this company? This is a very large company, one of the largest non-tech companies out there, $1 trillion market cap, about 16 times on the earnings side. And I think the real key here as an investor into this company is thinking about, well, what is the path forward for Berkshire Hathaway? Is Greg Abel going to be able to do the same things Buffett did? Probably not. But can he be successful? He can be. And I think that's something to pay attention to and watch. And I think that's super important to, as an investor to understand, well, should we continue to hold the shares? We do for the Investment Institute, again, not investment advice. I do think in a way, this is sort of the anti or the Contra. I want to say anti because, not fully against here. Contra, I think is a better word for it, but it's sort of the opposite of the AI trade. And I think it's super important to be thinking about and paying attention to what's happening there. What's the path forward? Can they do the same deals that Buffett had done? No. Can they do other deals? Yes. Do they have a lot of cash? Yes. Do they have a great set of assets? Yes. Could they break up, the company in a certain way? They could. Could they start paying dividends? Maybe. There's all sorts of things that could happen here, and we're not necessarily sure, obviously, from this point forward, what is going to happen. It continues to be, I think, under Greg Abel, a very well-run company, very disciplined company. I don't expect any of that to change. And so as a shareholder, I think, some people, including us, are going to adopt the wait and see and pay attention and see what Greg Abel is going to do. And also, again, if you're concerned about the AI trade having too much hype in it or any hype in it at all, this is a Contra trade where you have some stability in your portfolio, and these things are going to keep grinding away. Burlington Northern Santa Fe, for example, trains are going to keep getting loaded. So if the economy is doing well, they're going to do well, and they don't necessarily, in the short term, get beaten up too much by AI. Now, part of their, setup that can have a big impact on the negative side from AI, and so this is not, so this is where maybe AI is, on the Contra side, is that the insurance business. And so if you think about, what can be impacted in Berkshire, certainly railroads over a period of time might be difficult to create the railroads just with AI, at least right now, when the robots are out there running around. Possible, maybe that's different. But for right now, what's more sensitive could be the insurance. And so if you think about autonomous cars and you think about Geico and you think about the safety going way up, well, the cost and the price to pay, the premiums that you have to pay are going to go down significantly as a result if things are much safer. And, to continue to make money at that price point, obviously that price point can go down further if the safety is much higher and you have less accidents. And so good for people overall, safety-wise. Very challenging for Geico, as an example, as an insurance company. And so, and other forms of insurance, if they get priced differently, if they get priced better with the use of AI, and then specifically on the car insurance, which is a big part of the business for Berkshire and Geico specifically, that's something to watch. And so again, that is something that we have to pay clear attention to. So overall, Obviously, there's a lot more news out there. This is just a general episode. The market's off to, again, a reasonably good start. Not super hot, not super cold right now. A fairly good month already. You're getting a deal that just got announced with India on the trade deal, so there's positive news there. You're getting the nomination done. Like to mention also, we own shares of PayPal. They have not really done well. They're changing out their CEO, so more to come about that. So we'll pay close attention to that. I think PayPal's very challenged on the setup with competing against Apple Pay as an example. We mentioned Apple earlier, and so I think we're off to a good start. Again, not investment advice for this year. I think it's important for us to pay then attention to how the companies are doing. I do think this is a year. Maybe you don't get the mass run up and all of the AI names. There could be some distinction this year, so we're gonna have to do our work, pay attention. If you like watching the show, please subscribe. Thanks to everybody that does. We really appreciate it, and we'll look forward to seeing you back on the next episode. Thank you. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.